Right, this is the gold chart. Right. So let's have a look at so I'm just looking at the 2-minute time frame. Right. Now, gold, I've seen some people trying to buy gold, right? Trying to take the breakouts of gold. Because I understand that gold has sell bias at the moment. Right. So I see some people trying to do impulse correction, impulse. Let me just remove this. This may happen. One of the scenarios. I see people trying to buy this, trying to impulse correction, impulse. It's the move up is not worth buying, even if it goes up here. This move is hypothetical. It may not happen. The real move is that you need to sell this. This is gold bias is down, you know. So this one can do a 1, 2, and even crawl and just break the low. So if you're looking for this move up, it's not a good idea. As you can see now, it looked a low. So the question is, you know, if you've been trying to buy, it always under constant pressure. And yet, if you look at the sell, the sell is also not the easiest. Because if you look at the sell, as you can see, if I zoom out over here, it spiked up, it crawled up, it spiked up. So even if you try to sell anywhere, if you didn't take any profit, you will have experienced drawdown right here. Because the best move for here would have been, let's say, take this breakout here, boom. So it will have always spiked against the position, and if you're thinking impulse correction, impulse, you always be thinking, am I in trouble? Because you're always afraid that it could go up, you see. But now that it's broken the low, what can we do? The thing is, it's not safe to buy gold, because gold is being forced down. As we can see, gold is being forced down right here. So let me just draw that. See, gold is being forced down all the way here, and gold has a chance of getting to this level right here. For those who are looking to buy this, well, when this one crawls and then just collapses, you know, they'll be in big trouble. Some people trade without stop loss. Right? So don't always think that correction impulse is a good idea. It's not. It's the context of the market. The bias is not up, the bias is down. Right? But was it easy sell? Not easy at all. Some people, my friend got in somewhere here because he was doing was a volume entry. And basically, when there's the price went up because of volume, and then because of how he studied the tick volume, he decided to take an entry over here, and then it dived. Right. So, but the main thing here that I want to advise is to share is, don't always think impulse correction impulse. Right. Think of the entire context. Think that know that price action is going to get from this zone to this zone, see here to there, and price can just crawl all the way down and just collapse. So if you're trading up, it's going against the bias, right? So if you know how to trade this, there's actually ways like an impulse. This is actually a 3-way structure, 1, 2, 3. This tree was very tough because it's 1, 2, 3, sharp correction up, and followed by one more down. So that is the wave count. So you need to know how to trade we need to know the wave count in the direction of the bias, which you see this arrow here. This is direction of the bias. Even if as it comes down here, breaks low, you got to take some off, because why? It could do a 1, 2, 3. This is a liquidity swing. It knocks people out of the market before it dives, but it's always a sell. Right, upside is hypothetical. This one could just crawl, and then from here it just 1, 2, and then this third wave just drum all the way down here. And people looking for the buys are completely caught flat-footed. You're always wrong, right? So, what about if this drops here and then it shoots up? Well, most people would not have the courage to buy up here anymore, because they just lost a ton of money. So saying that I knew it was going to go up, probably not, because it's tough, you know. It's tough to actually buy this up when you're taking impulse correction, impulse, and then suddenly break the low. How are you going to buy this up? It's tough. It's something that you might think you can do, or something people might just forecast, but unless you really know how to trade this up, all right, most people will not be able to do it. Right. So anyway, the sales is, if it does go up, just look for the sell at the top again. But I think after a crawl that breaks this low, this one can always just crawl. If it comes back, retest, it does not close above, or even close above, but comes back below here and below this low, this thing has a chance of crawling and touching the low. Right? If it goes up and does not come back down, then you can look for impulse correction, impulse for something like an expansion 1, 2, 3. Then look for the sell again. Right? All right, that's all I want to share about gold. Thanks. Bye.